Let's say you stop working today. No job tomorrow. No freelancing. No side hustle. How long would your money last? A week? A month? Maybe a few months if you're careful. For most people, the answer is uncomfortable, because their entire financial life depends on one thing: their next paycheck. And the moment that paycheck stops, everything else starts collapsing. Bills don't stop. Rent doesn't stop. Food doesn't stop. But the people who slowly build real wealth don't rely only on paychecks. They rely on assets, things they own that continue producing income, whether they're working or not. And in 2026, there are more opportunities than ever to build assets that can literally pay you for years. Introduction. My name is Zach, and spend way too much time thinking about relevant financial topic. If you're someone who feels like you're constantly working, but never really getting ahead financially, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because today we're talking about something that completely changes how money works in your life. The difference between earning money and owning things that generate money. The paycheck trap. Here's the financial trap most people fall into. They believe the key to financial success is simply getting a better job, higher salary, better position, more hours. And while increasing your income helps, it doesn't fix the real problem. Because income requires your time. You work, you get paid, you stop working, the money stops too. Assets work differently. An asset keeps generating income even when you're not actively working on it. And this is where it gets really interesting. According to the Federal Reserve Survey of Consumer Finances, the wealthiest households hold the majority of investment assets like stocks and private businesses, which means their money is constantly producing more money. That's the real difference. Why most people never build assets. Now you might be thinking, if building assets is so powerful, why doesn't everyone do it? The answer is actually psychological. People are naturally drawn to immediate rewards. Buying something today feels good instantly. Building assets often means delaying that gratification, saving instead of spending, investing instead of upgrading your lifestyle. There's a well-known psychology experiment where children were offered one marshmallow immediately or two marshmallows if they waited a short period of time. Most children chose the immediate reward, but the ones who waited tended to show better long-term outcomes later in life. And wealth building works the same way. It rewards patience. Asset number 1, content and digital products. One of the most powerful asset categories today is digital. This includes things like YouTube channels, online courses, ebooks, digital templates, mobile apps. What makes these assets powerful is their ability to scale. You build them once, but they can generate income repeatedly. For example, let's say someone creates a digital guide priced at $20. If that guide sells just 4 times per day, that's $80 daily. Over a month, that becomes about $2,400. And the product itself doesn't need to be recreated every day. It continues selling. This is why so many creators today focus on building digital assets. The work happens once, but the rewards can continue for years. Asset number 2, dividend stocks. Another common asset is dividend-paying stocks. Some companies distribute a portion of their profits to shareholders. These payments are called dividends. Many large companies offer dividend yields between 2% and 4% annually. Let's say someone invests $25,000 in dividend-paying stocks with a 3% yield. That produces about $750 per year. Now, by itself, that may not seem huge, but when those dividends are reinvested, they start purchasing additional shares. Those shares produce more dividends, and the cycle continues. According to long-term market research from J.P. Morgan, reinvested dividends have contributed significantly to total stock market growth over time, which means a large portion of investor returns comes from compounding income. Asset number 3, rental income. Real estate is another classic example of an income-producing asset, but the real power of real estate is cash flow. Imagine purchasing a rental property that generates $1,100 per month in rent. After expenses like maintenance and taxes, maybe the profit is $350 monthly. That's $4,200 per year in income. And in many cases, the property itself may increase in value over time. Owning multiple rental properties can gradually create a reliable stream of income that doesn't depend on a traditional job. The asset snowball. Here's something most people underestimate. Assets create a snowball effect. One small asset might produce $50 or $100 per month. That might not seem significant, but when you start stacking multiple assets together, the numbers grow quickly. 5 assets generating $100 each equals $500 per month. 10 assets equals $1,000 per month. 20 assets equals $2,000 per month. And this is exactly how many financially independent people build their income. Not from one giant success, but from many smaller assets combined together. The lifestyle trap. One of the biggest reasons people fail to build assets is lifestyle inflation. Every time their income increases, their spending increases too. A better phone, a newer car, a bigger apartment. These things may improve comfort in the short term, but they don't generate any income. Assets do the opposite. They increase your income over time instead of draining it. Where to begin? If you want to start building assets today, focus on 3 steps. First, develop useful skills. Skills allow you to create products, businesses, or content. Second, invest consistently. Even small investments can grow when given enough time. Third, prioritize ownership. Whenever possible, focus on owning assets rather than simply consuming products. That shift alone can change your financial future. Final takeaway. Building assets that pay you forever isn't about overnight success. It's about small decisions repeated over time. Choosing to invest instead of spend. Choosing to build instead of consume. One asset leads to another, then another, and eventually those assets begin producing enough income to support your life. That's when money stops controlling your time. If this video helped you understand how assets actually create financial freedom, hit the like button and subscribe. Because on this channel, we break down the strategies and psychology behind building long-term wealth. And before you leave, think about this. What asset could you start building today that might still be paying you 5 years from now? Because the sooner you start building assets, the sooner those assets start working for you.